Good evening, everybody. We would be taking additional minute or two to get started. We're just waiting for a little more participants to join in. We would be starting in not later than 2 minutes from now. Thank you so much. Okay, Abhishek and Tinku, maybe we can get started if that is okay with both of you. Great. Okay, a warm welcome to all my colleagues in the IIA and to Mr. Abhishek Agarwal. And thank you for taking out time on a Sunday to hear this wonderful session, which I can't wait that Abhishek gets started. With that said, let me hand it over to my colleague, Vice President IIA Hyderabad, Mr. Tinku Patia. Tinku, over to you, please.
Thank you, Sunil. Thanks very much. And so, hello and greetings to everyone. And on behalf of IIA Hyderabad Chapter, I would like to extend a warm welcome to our esteemed speaker, Mr. Abhishek Agarwal, and to all the participants. A big thank you to you for joining us on this Sunday afternoon. And in terms of introduction, Mr. Abhishek Agarwal is a chartered accountant by profession, and he is also a holder of diploma in information system audits from ICAI, certified forensic auditor from ICAI, and certified concurrent auditor from ICAI, as well as a law degree holder also. He had completed his industrial training from ITC Limited. He is a special invitee to the National GST and India Tax Committee of Delhi for last 2 years, the ICAI. He had also contributed in drafting the practical FAQ on input tax credit, handbook on refund under GST, handbook on exempted supplies, background study material on GST, handbook on annual return, technical guide on GST audit. All this have been published by our India Tax Committee of ICAI. He is also recognized as a faculty member by India Tax Committee of the Institute of Chartered Accountants of India, and also a regular speaker in various forums, study circles, trade association. He is also a regular contributor to various articles related to indirect taxation in the professional and industrial forum. With this brief introduction, I would like to once again welcome Mr. Abhishek Agarwal and hand over the baton to him. Over to you, Mr. Agarwal, for your insights and insightful session on this departmental audit. Over to you.
Thank you, sir. Thank you, Sunil, sir. Thank you, thank you, sir. Of that, at the outset, I will thank you, IIA Hyderabad, to allow us to share our thoughts on the topic given to us. So, our firm is a national firm, and I am leading the indirect tax division of the same. And now, how we'll proceed is we'll share first the important pointers which will be useful for industries, how to handle technically when the department officers comes to our premises for conducting department audit. Number one. Number two, we also see the process, how how things will be done, what can be done under the provision of the law, till what level it can be stretched, till what time it can be stretched, right? Knowing the provisions are very important. So we'll make it very practical. I would request all the participants to always note their questions in Q&A or in their handwritten sheets and post it after the session gets complete, so that we are not going to miss a single question. I will definitely love to share my thought process on all the queries to come which comes to your mind, right? So with that, I will just share my screen. Perfect. Is my screen visible? Yeah. Okay. So this department audit under section 65 can be discussed in three perspectives: a professional's perspective, which we are going to discuss today; a department perspective, if an officer gets into for an audit, what they will think, how they will think, what they will look after it; and again, a perspective of a businessman, right? So we will be looking after the professional's perspective, and we will see how to manage the other two perspectives, right? So I will explain this in more detail as I move into my further slides. So chapter 12 of the GST Act talks about assessment, right? Friends, what I want to draw a line in this slide is that department audit is something which is very much different from the word assessment. The word assessment is governed by chapter 12 of the GST Act, and self-assessment, provisional assessment, scrutiny of returns, assessment of non-filers of returns, assessment of unregistered person, and special assessments can be are to be taken care of by chapter 12, and audit is not getting covered in this. Similarly, section 73 and 74 talks about demand and recovery. These sections are the sections under which show cause notice can be issued to a registered taxable person, right? So if a SSC or a petitioner is uh, have done something without having an intention to do a fraud, without willfully misstating the facts, then notice can be issued under section 73. And if a activity, if a transaction, if a fault is involved, if a fraud is involved, willful misstatement is involved, then a show cause can be issued under 74. So again, these are the Dracula provision which is governed by chapter 15, and again, audit is not also covered in this chapter 2. In income tax, we use general language raid, right? Income tax raid. So similar provision is in the GST, which is chapter 14, that talks about inspection, search, seizure, arrest. So these are the provisions by copy paste of raid in income tax to provision in GST. And again, all this chapter 12, chapter 15, chapter 14, this all three chapters are not talking about the word audit, right? So before starting the session today, let's have this very crystal clear, that if a department officer wants to come into our premises for conducting an audit under section 65, he can only do audit, nothing else. He cannot start audit and stretch the audit from chapter 13 to chapter 12 of assessment. He cannot start an audit and conclude in doing the scrutiny of returns or doing any survey or any search and seizure, right? When he is coming for audit, he can only and only do audit, right? So audit is very much a procedural aspect. If you're a registered person, you have to file returns, you have to do your assessment, you have to file annual return, and you may be subjected to GST department audit. That's it, right? So department audit is nothing else but a procedure thing, which is very much important. Is it new? No, it is not at all new. In erstwhile law, excise, there was department audits; VAT, there was department audits; service tax, there was department audits, right? Similarly, in a new fashion, in a new different way altogether, in GST also we are going to have the department audit. Okay. So section 2 subsection 13 defines audit, right? What it says, it means audit means, important word is examination. So a person coming for an audit cannot go outside the scope of 2 subsection 13, right? And what does 2 subsection 13 says? 213 says examination of three things. Examination of records. What records? Accounts and records under GST. Returns. What returns? Returns under GST. So accounts and records, returns, and other documents. Documents maintained in the GST Act or in any other act. So if I am a GST auditor from a department and I come to a premises, so I will say I would like to examine the accounts and records. You are instructed to show me. If I ask that I want to examine the returns, okay, I can check that. I want to check the documents related to the GST, okay, I can check that. So from this definition, I can also come and check the documents maintained under ESI law, PF law, Factory Act, any other act. So in any other law, whatsoever documents you are required to be maintained, I can always come and examine, right? So audit is defined as examination of records, returns, and documents. Okay. Can I come and see the documents and give you suggestions? Can I start giving you suggestions? Sir, you have taken the goods at the rate of 12 rupees, but in the market you might have got this product in 10 rupees. Answer is no. Abhishek, being a GST department auditor or officer, cannot give you any suggestion. He is only binded by the law that I can only do examination of records, returns, and documents, and I can do this examination for the purpose of verifying the correctness. I can only do this examination to verify what? Verify the correctness. Okay, so correctness of what? All the books of accounts? No, I can verify the correctness of only 4 things: turnover declared, taxes paid, refund claimed, and ITC availed. That's it. That's it. So okay. So I can only verify the correctness of turnover declared, taxes paid, refund claimed, and ITC availed. Perfect. And I can also stretch to check that compliance is done or not. What could be the compliances? I might enter to your premises and I might check that GST number is missing in the name board. I might get into your common area where your reception table is there. I can see trade license copy is there, but GST certificate is not there. So these are the mere compliances which is binded by the provision of the GST law. So I can go and check that also. So friends, what I want to convey till now is, number one, audit is not assessment, raid, scrutiny, search, seizure. No, audit is merely a procedure, right, which a department officer will conduct when they are issuing a notice under section 65 to conduct an audit. They cannot stretch that audit to search, seizure, or anything else. They have to complete this audit first, right? Second, audit is binded in a box. The boundary wall has been defined under section 2 subsection 13, which says examination of ... verify the correctness of ... and they cannot go beyond this. They cannot go beyond this, right? Next, 65 subsection 1 talks about few words which requires your attention. What are the words? The commissioner or any officer authorized by him. Friends, please do take a note. Because of the structure of the department across India, various lower level officers, even superintendents are issuing these notices, right? So you should have challenged that whether that particular officer is authorized to do it or not. So whether the commissioner or officer authorized by him, by way of a general or a specific order. General order, chartered accountant in Hyderabad having turnover more than 10 crores are subject to audit. Specific order, Abhishek Agarwal having office in Hyderabad is required to get audit. Right? General order, specific order may undertake audit of any registered person. There cannot be a GST department audit of an unregistered person. For such period, a period has to be defined 1718, 1718, 1819 or 1920. Let's say 1718 audit got completed. Now they are coming for next year audit 1819. But in the notice, they are writing that they want to conduct an audit of 1718 again. So they are writing 1718 to 1920. You have to object it. You have to say that 1718 audit has already been done. You cannot repeat the audit. Right? So such period is important at such frequency and in such manner as may be prescribed. Right. So my point is here that audit structure definition has been defined. 65 also streamlines that who can issue a notice, by what order, and to whom. Right. So a department audit can be done only in this fashion. Now, friends, I am bringing various practical pointers in front of you and we will discuss on the same, right? So I will request each and every one of us, I know it's a Sunday evening, but I will request each and every one of us to kindly sit with a paper and a pen because I'm sure this will be some good takeaways for you, right? Okay. Friends, we are in corporates, right? So I'm giving you 5 instances from where I can check your outward supplies. Number 1 is your books of accounts, where you are saying me sales X rupees. Okay. Now the figure available in GSTR1 might be different. Why so? The figures in GSTR1 might require some amendments of the previous period. A GSTR in GSTR1, an invoice might have been double uploaded, or a single invoice has been missed, or a single digit in a particular transaction has been wrongly omitted. So, outward supply details in your books of accounts, GSTR1 figure, your GSTR3B, the figures which you have given in your GSTR3B, figures in which you have disclosed in e-waybill portal, and the figure which is available in the e-invoicing portal. All these 5 figures pertaining to the same outward supply for a particular time period might be different. So Abhishek, is it wrong? There can be practical reasons that my e-invoicing data, my e-waybill data, and my GSTR3B data are not reconciling. Sir, there can be a very practical and legitimate reasons. So having differences is not an issue, but not having a reconciliation is an issue. A department officer will always come and might ask you to say or reconcile these figures of all 5 origins. And we are supposed to maintain that reconciliation today. That why in GSTR 3B 1 lakh rupees is there, why in GSTR 1 lakh 10,000 is there, why in e-waybill 80,000 rupees is there, because we might not require to issue e-waybill for the remaining transactions, and why in e-invoicing only 40,000 is there. Irrespective, you have done B2B supplies for invoicing only 40,000 rupees. So you need to maintain a proper reconciliation of at least outward supply of all these 5 origins. Similarly, inward supplies. Friends, there is a huge fight, huge debate of what to refer, GSTR 2A, GSTR 2B, what to refer. I will discuss this in future slides. Just bear with me for some time. Only point is to be noted here is, similar to outward supplies, in inward supply also, the figures disclosed in GSTR 3B versus GSTR 2B versus 2A versus e-waybill received and in your books of accounts. So I got a notice for a client who said that in which it was written that you have claimed IGST credit of 10 crore rupees, but ITC of only 8 crore rupees e-invoices e-payables has been issued to you. So please disclose why this 2 crore IGST extra has been taken by you. I have checked all the books of accounts, and it was seen that there was import of service on which the client have paid the taxes, right? So IGST is legitimate to be taken in my books. It is there in GST 2B, not in 2A. It was there in GST 2B. I am taking the credit, but I am not having an e-way bill. For that also, I got a reconciliation notice from the department, right? So outward inward supplies reconciliations are important. Nevertheless, you are genuine, but the figures are different from different origins. If you want to, I will cover 26 years also. I will cover sometime later. Yeah. Okay. Okay. ITC only available when the goods are received. Section 16, subsection 2 lays down 4 pointers that you can only receive a goods when you have received the invoices. When you have received the tax payment document, you have actually received the goods, the supplier has paid the taxes and has filed the returns. So let's say Abhishek have ordered a goods, and in the month of August, 29th August, I have ordered you a goods that, sir, please send and dispatch those goods to me, right? You have dispatched those goods to me. You have just dispatched those goods to me. Now I want to understand that now I want to understand that whether those if those goods reach to my office, if those goods reach to my office on 2nd September, then can I take the credit in the month of August, or I can take the credit in the month of September? I'll repeat the question. I have ordered a goods in the month of August. You have dispatched the goods in the month of August, but the goods got delivered to my premises in the month of September. You have invoiced in the month of August. You have shown in your GSTR1 in the month of August. In my GSTR2A, in my GSTR2B, it is all coming in the month of August. But I have received the goods in the month of September. So according to 16 subsection 2 clause B, I am only eligible to take the credit in the month of September, despite all things are disclosed in the month of August. Right? Number one. Number two, I have booked a ticket to from a travel agent that I want to fly to Hyderabad in the month of September. Today I have called him. Today he raised the invoice. Today he booked the ticket and mailed the invoices to my mail ID. My accountant took the printout, done the payment, and taken the credit. Can I take the credit? Answer is no, because I am consuming the service in the month of September. So I am only eligible to take the credit when I am actually receiving the goods or receiving the service. Right? So ITC only available when the goods are received. Friends, whatsoever pointers I am discussing now, I am only discussing from the perspective that if an officer comes to a premises, he might always like to see all these parameters, right? So we have to be prepared for this. Okay, very important that different trade, different bodies function in different way, right? Let's say if I am having a vendor who is going to supply me continuously, for a good number of time, so I might always retain 20% of the entire invoice value that I will pay you after the contract gets complete. But we may always, our ITC may always get add back with interest and penalty if we are not paying them within 180 days, right? Again, there's a litigation that fails to pay word defines that you have actually failed to pay. Only deferring the payment is not failing to pay. That's a different debate altogether. But an officer would love to check that whether you have paid the invoice within 180 days or not. Okay, this is important. If you are paying taxes on reverse charge mechanism, and the said goods and services has been taken from an unregistered person, you are authorized, or rather you are eligible to take the credit if and only if the self-invoicing is done, right? Friends, for MSME, we know that 99% of the industry has not prepared the self-invoicing, and officers know this, right? So if an officer comes to premises and asks for a self-invoicing and it is not there, they can straight away go and add back all the ITC of reverse charge mechanism and demand interest and penalty. Okay, friend, this is important. I have seen invoices in which you are taking the credit, but your GST number is not printed. The supplier's GST number is not printed, right? The HSN SEC code is wrong. The rate of the GST is wrong. The description of the goods is wrong. So, as per the provisions of the GST, few 5 to 7 parameters has to be mandatorily maintained in invoice. So, without that, you are not eligible to take the credit. So, a proper invoice has to be there if you are taking the credit. Okay. Addition and deletion in fixed assets. Let's say Abhishek has an office in a ground floor for a GST compliance activities. Now the litigation activities are increasing, so he built up with the second floor, and he said that in the second floor only lawyers and advocates will be sitting to handle the GST litigation work. So the construction took, let's say, 50 lakh rupees plus 9 lakh rupees GST. So 9 lakh rupees credit is available or not. So 17 subsection 5 says whatsoever ITC you are getting for work from the work contract service is blocked under GST Act. But friends, please have a note, Safari Retreats Honorable Odisha High Court judgment said that you can always take the credit since it is used in the course of furtherance of business. The law says you are not allowed to take the credit, but we have a judgment of Honorable Odisha High Court, which says in the case of Safari Retreats, which says that you can take the credit. Now the same has been pending from Supreme Court. SLP has been filed, so we are expecting an order in a next couple of months, anytime. But what I can suggest you is, if you have done the expenditure, if you have capitalized it, and if you want to take the credit, please take the credit. Do not utilize it. Put that credit balance into credit ledger consistently, so that if a Supreme Court order comes against us that you are not eligible to take the credit, you simply reverse it through your credit ledger itself. So as per 50 subsection 1 proviso, you are not required to pay even the interest. You're not even required to pay the interest. So addition and deletion of fixed assets to whom we are capitalizing it, right? The work contract credit is a huge portion of expense, a huge portion of amount which might impact us, right? So that point, as an officer, I would love to check. As a consultant, I would love to guide that please account it properly so that it doesn't pinch you. Okay. A lot of industry, face damaged goods or goods which they issue in free samples, or in pharma industry, lots of medicines get expired. So blocking of credit, section 17 subsection 5 section 17 subsection 5 similarly particularly says that those credits are to be specifically blocked. Now you have to be very cautious on interpreting this, right? Let's say I'll take a small example. Food credit is blocked. So if I get a food bill from a 5-star hotel, the ITC pertaining to that food bill is blocked. But if I take let's say I'm conducting this conference of IIA live in Hyderabad in a physical mode, right? In the Taj in Hyderabad, I am there physically present. You all are my participants. I am charging delegation fees of 1,000 rupees, right? Plus GST. I'm charging delegation fees 1,000 plus GST. What I'm supplying? I'm supplying you GST consultancy. I'm supplying you a folder, a notepad, a pen, a high tea, and lunch. Right? These are the things which I'm supplying to you. What I'm purchasing? I'm purchasing food bills from Taj. 50 people will come and listen to my seminar. I want a food bill from Taj. So my question to you is will 17 subsection 5 will block my credit of this food bill of Taj? Will 17 subsection 5 will block my credit of food bill supplied by Taj? There might be answers yes, there might be answers no. Friends, please do note the ITC of this food bill is completely eligible. I'm eligible to take the credit of this food bill. Why so? Because what I am consuming is the food invoice. What I am supplying you is a primary supply is GST consultancy. Ancillary supply is notepad, folder, pen, high tea, lunch. So I'm taking the lunch service, high tea service. I am also giving the same service. So I'm eligible to take the credit. I am falling in the proviso of 17.5, right? So we have to read the law as it is, right? Our officer will always shout, no, it's a food bill. You are not allowed to take the credit. So it doesn't mean that is merely it's a food bill. I am not allowed to take the credit, right? We have to go into the shoes, actually see if we are eligible to take the credit. We should mandatorily take the credit. Okay, very important. Friends, there has been confusion for last 1.5 years that reverse charge to be paid on the director's remuneration or not, right? So let's say Abhishek is a director in your company and Abhishek is having a employer-employee relationship, a established employer-employee relationship. I am a director, I get a remuneration for the work I do there. So in that remuneration, reverse charge mechanism is not applicable. Other than that, if I'm an independent director, I only come for sitting on the board meetings. I charge sitting fees and I get those. So that is subject to RCM, liable to be paid on the company's hand. So MSME corporate, they said, Abhishek, I don't want to get into any complexity. Irrespective, we are liable to pay tax under RCM or we are not liable to pay tax under RCM. You please pay tax on the director remuneration and take the credit. We don't want any complications later on. You pay the tax in RCM, you take the credit in the RCM. An officer will visit your premises during audit and he will pick this. He will say, Abhishek, number one, you have paid excess RCM. Please go and claim refund of it. You have paid excess RCM. Please go and claim refund of it. You have taken excess ITC. Please reverse it with interest and penalty. So your thought process might be that you want to be a law-abiding citizen, bona fide approach, pay tax, take credit. But an officer will say, no, 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 that is a different two sections. RCM liability is a different section. Taking of credit is a different section. You have paid excess RCM, go and take the refund. You have taken excess credit, reverse it with interest and penalty, right? So we have to be that careful on this. Okay. Next important issue is debit note and credit note. Friends, I know this is a pure basic thing, but this is very important from the perspective of the professionals because department officers will attack on this. I will just give 2 pointers here. Let's say Abhishek is a supplier, has issued a 1 lakh rupees invoice to you. Later on, you say, Abhishek, we need a 10,000 rupees credit note. So I give you a 10,000 rupees plus GST credit note. My question to you is, what will you issue back? If I issue a credit note, will you issue me a debit note? I know 50% of you are saying, yes, we will issue a debit note. Friends, please note, you cannot issue a debit note. A credit note and a debit note, please read this. A credit note and a debit note can only be issued by a supplier. Can only be issued by a supplier who has supplied the goods. Right? So a credit note and a debit note cannot be issued by the recipient. If Abhishek is issuing a credit note, the counterpart will merely pass a debit journal. If Abhishek, being a supplier, is issuing a debit note, the counterpart will only pass a credit journal. That is a merely entry. If I give you my sale invoice, you merely pass a purchase entry, right? Reversal from your end is important, but issuing of debit note is not at all valid. If you issue a debit note, what happens? If you issue a debit note, what happens? Your liability get increases, right? But you are required to reverse the credit. Instead of reversing the credit, you add back to your liability. So an officer will always say, you have again paid the taxes extra, go and claim the refund. You were required to reverse the credit, reverse now with interest and penalty, right? So it has to be read as it is. Second point to notice, a credit note can always be issued without GST. A financial credit note or a commercial credit note can always be issued without GST. So that's the reason the word used here is MAY, may, right? But a debit note mandatorily shall be issued with GST. The word is written shall, right? And there are two reasons for this. A credit note is, that's the reason credit note has a time limit, that you cannot issue a credit note post 6 months from the end of the financial year. For debit note, there is no time limit. And if Abhishek is issuing a credit note with GST, the onus is on Abhishek to prove department that the purchaser has reversed the credit. The onus will be on Abhishek. It is mentioned in the proviso clause that the onus is on the supplier to prove that the recipient has reversed the credit, right? So these are the basic things which an officer would love to check, right? Second important point is cross charge. Friend, the concept of the cross charge was brought to us from the judgment of Columbia Asia, and people are following it, officers are after it. So whatsoever parameters you choose, the salary of the directors, the common expenditure of the head offices, whatsoever parameter you choose, please maintain a proper working out of it. Otherwise, they will always challenge and question that. Okay. It has been seen that classification issues has been there. I will just also stretch this to the HSN level issues also. Let's say if I say a pen is there, for example, I say the GST rate is 18%. You can always come and fight, ki, Abhishek, this is a article of plastic and it is to be taxed at 12% rate, right? So classification issues needs to be taken care of. You just cannot take a stand that your vendor given you this HSN and this rate, and with this HSN and this rate only you supply back, you supply further, right? This cannot be your stand. You are responsible for whatsoever you are charging. Second, friends, from April 2021, organization having turnover more than 5 crore rupees are mandatorily required to maintain 6-digit HSN code, right? So this 6-digit HSN code is important to be maintained and has to be accurate. Right? So this is to be taken care of. Okay. If you are having any exempt income, then you are required to reverse the common credit on a proportionate basis. So 90% of the corporate says, no, we are not having any exempt income, so we are not required to do the reversals. Hold on. These 90% corporates invest in securities. The moment there is a sale proceeds of the securities, as per Rule 4243, 0.1% of the turnover of these proceeds is to be considered as a exempt income, and the reversal has to be done accordingly. So the reversal of 4243 is one of the very important area where our officer will love to jump and see the calculations. Okay, let's say during finalization of audit of 2021 financial year, you come to observe that 1 lakh rupees is short paid in GSTR 3B of the previous financial year. So you want to pay it. It is advisable to pay it through DRC 03 only and not through GSTR 3B. Why so? because there is a separate reconciliation of 26AS and GSTR 3B. So again, this will be very important to pay through DRC 03, not through GSTR 3B. And what we do in table 5 of GSTR 9C, your accounts and records as per Income Tax Companies Act and accounts and record as per GST Act will be different. Your stock transfer from one state to another state will not be considered as a turnover in income tax, but will be a normal turnover for GST, right? Okay, friends, as we know that there is sunset provisions of SEZ developers and units. So lots of SEZ developers and you are getting units are converted to the normal DTA, right? Please take a note that on 17-18 financial year, 18-19, 19-20 and 20-21, you were still were the SEZ units. Now you are jumping to a DTA, right? There would be good number of compliances. I am sure you can take care of that, but tomorrow when an officer visits and govern you like a DTA, please maintain proper provisions, proper compliances. That time you were SEZ developer. You, if you have purchased goods from a DTA, if you have supplied goods to a DTA, if you have supplied goods to SEZ also, whatsoever documents were required to maintain, even the authorization, everything, please do maintain a proper system of that, because officers will have a confusion that today you are DTA, that time also you are DTA. You have to point out, no, I was a SC at that time, today I am DTA. You are conducting an audit of the previous regime, please do it as a SEZ only, right? So those all things has to be taken care of very properly. Okay, friends, important thing is which I want to discuss, and then I'll jump to the second portion. That if Abhishek has supplied you 1 lakh rupees goods, but has missed disclosing the GST one within the due date, so Abhishek will get, you will get the transaction in your GSTR 2A, because I have filed in the next morning. So let's say the due date of GSTR 1 was 11th, but I filed in the month on 12th morning. So because of my delay, you will see the transaction in your GSTR 2A definitely on 12th, but it will not be available in the GSTR 2B. It will be available in GSTR 2B for the next month. So are you going to take the credit, or you are going to defer the same for next month? So my question to you is, will you follow GSTR 2A or will you follow GSTR 2B? To answer this, department, while issuing the GSTR 2B through a notification, has given an important advisory just below the form of GSTR 2B. And that advisory says, taxpayers are advised to refer form 2B for taking the credit in 3B. However, in case for additional details, they may refer to their respective 2A, which is updated on a real-time basis. This means that the legislature indicates that if there is additional invoices available in GSTR 2A and not available in 2B, we can always go and take the credit. So this indicates that there is a requirement to do the reconciliation of GSTR 2B and books, and also the requirement to reconcile GSTR 2A and GSTR 2B, both, right? So this is important, which I wanted to share. Okay, friends, you might always say, Abhishek, okay, you are sitting there and saying me that follow 2A, 2B. Tomorrow a department officer will come to my premises and say that you have taken 1 lakh rupees credit in your books and 3B, but your 2A is showing only 70,000 rupees. 30,000 credit you have taken belongs to Abhishek Agarwal, and Abhishek Agarwal has not uploaded GSTR 1. So please pay this 30,000 with interest and penalty. The officer might not listen to you at all, right? I am not asking you to litigate. I'm not asking you. I'm just asking you to put in your submission that, sir, in GST audit manual, we will discuss what is GST audit manual. In GST audit manual issued by CBIC 2019, in para 5.8.3, this is written that if there is a difference in books and 2A. The officer need to do the reconciliation, point out the vendors of whose transactions are not available in GSTR 2A. The officers are liable to contact Abhishek Agarwal and ask, since your invoice is not available in the 2A of the purchaser, please give us a particular evidence, a proof that you have paid such taxes. Officer will ask the supplier to give evidence that you have paid such taxes. That's it, right? On the basis of GSTR 2A and 3B difference, they cannot demand any tax from you. So that's an extract from 5.8.3. I will show you the manual. I will show you the manual that will be useful to you. Okay. Last thing on this, we can see that there is a very recent judgment of Madras, Honorable Madras High Court DY Bethel Enterprise, which says that if the supplier is available and it is proved that the recipient has paid taxes to the supplier, then the taxes are to be demanded from the supplier and no demand can be raised from the recipient itself, right? So these are all the provisions of section 16, 38, 39, 41, 42, along with rules 60, 69, 70, 71, 72. This entire block indicates the actual provisions of input tax credit. Friends, now I'm jumping to the procedural aspect of the department audit, right? So let me show you the flow of the audit, right? So this flowchart has been taken from the GST audit manual only, right? So let's see what happening here. So in the DG audit office, they will start the risk assessment. They will see the risk flag scores that so there are different parameters. In all the different parameters, they are required to give you marking from 0 to 4, right? Abhishek has not filed the returns 7 times in last 12 months. So my score is 4. Abhishek has filed the return one delay return in 12 months. So my score is might be 1. Accordingly, in each parameter, my scoring will be done and entire scoring will be added back, right? Add back. So this, let's say all the scoring has been completed, then the DG office might take a decision that anyone scoring above 50 will be subject to audit. Anyone scoring above 50 will be subject to audit, right? So DG audit will do this risk assessment, select the units for audit and allocate to the audit commissionerate. The audit commissioner will further list down to the circles. The audit circle will distribute and do the mapping to the superintendent level. Now, what will they do? The superintendent will issue ADT01 form to the RTP, the registered taxable person, and start the audit. The RTP will give the documents and the superintendent will start the desk review, the audit from the informations given by the RTP. If they want any clarifications, they will issue a form ADT1A. They will give a form ADT1A. In this ADT1A, the RTP will get to know what the clarifications they want to understand. Let's say there were 5 clarifications demanded by the officer. I, being a RTP, answer back all the clarifications in GST ADT1B. From my 5 clarifications, officer is satisfied in the 1, 2, 3 queries raised by them. In 2 points, they are not satisfied. So they will take my submission and their submission and they will present to the monitoring committee. This monitoring committee sits once in a month minimum. So in the MCM monitoring committee, this will be monitored and observed along with the clarification which I have submitted. Now the committee will decide whether to proceed or not to proceed. If they are satisfied, it will be closed. The audit is completed, and they will issue us ADT02. If they are not satisfied, they will write to our jurisdictional officer and they will issue a show cause notice. Friends, this is the show cause notice which is covered under section 73 and 74 under chapter 15, demand and recovery. So if they point out they demand a clarification and they are not satisfied with our explanation, then only they will proceed to the issuance of show cause notice under 73 or 74, right? So what are the risk parameters of which the 0 to 4 scaling will be done? So size of the taxpayers versus the net profit, exemptions claimed by the taxpayer, size of the taxpayer's refund claimed, financial ratio analysis and major variations. So what is this? Let's say my 1 lakh rupees was payable, and out of 1 lakh rupees, 99,000 was paid through by using credit ledger, and merely 1,000 was paid through cash. It is perfectly okay if your business permits. But let's say a business like mine as a chartered accountant, so we pay 70%, 80% of the tax amount in cash. So if a chartered accountant is using 90% credit ledger, then it is something audit, the score will be high, right? So the ratios, they will accordingly give the score. Higher incidence of supply without issue of e-waybill. You are making transactions, but you are not issuing e-waybill. That might be perfectly perfect, all right, but this will be a parameter to do the scoring. If you are a frequent defaulters of the GST returns, then that will be subject matter. Taxpayer having multiple branches, or taxpayers who are not been audited in the pre-GST regime for last 4-5 years, they might get an audit notice. Taxpayer returns was previously investigated for evasion. So it's been long 4 years. Let's say it has been evidently proved that you have taken fake invoices or you have purposefully evaded the tax. Then definitely your score for this point will be full, right? So they might always come down to you. Now, specific information received from income tax, ROC, RBI, so they can always consider that parameters and conduct the audit. So these are the basic risk parameters which they will examine to whether to choose your GST for audit or not, right? Audit will be state level. So you might have a presence in 15 different states and 6 states come for GST department audit and rest are not coming under audit, might be possible, right? So friends, now I am stepping into the GST audit manual, right? So I will just complete this very shortly because this is important. So the entire audit manual can be divided in 5 groups. Number 1 is taxpayer profiling. Number 2 is desk review. What is taxpayer profiling? The entire database of the taxpayer, starting from GST registration, even the data from the erstwhile law, when they are registered, when they are not registered, what products they are consuming, what they are supplying, what HSN they are consuming, GST rate of the same, what are the frequency of the returns they are getting into it, are they a defaulter, are they not a defaulter? Everything about the taxpayer profiling is completed from at their end. Second, when they ask documents from you, what they do check, what are they supposed to check for a service provider, what they are supposed to check for a person who is dealing in goods, what they are supposed to check from the director's report, from the balance sheet, from the trial balance, from cash flow. All these things are separately disclosed in these annexures. I will show this, right? So they do this desk review. Again, after doing this review, they prepare an audit plan, which is specifically required to get approved by the senior officer. After that, they jump into the audit verification, that is coming down to your premises. And post that, they after waiting from monitoring committee, they issue you a ADT 02. Friends, one thing is important, that if you are a small taxpayer that is below having turnover below 7.5 or 10 crore rupees, they might always choose not to come to your premises. They might always choose to do only desk review and complete the audit. But if you are above turnover having above 10 crores and below 40-50 crores, then you are in mid segment. So they might come down, they might not come down. And again, the people having turnover more than 50 crores, they will definitely come down to your premises for conducting the audit. So these are the annexures which I was talking about. Annexure 1 talks about register person master file. 2 is ADT01 which is issued to you. 3 is documents which will they require for conducting the desk review, right? If you can see the last two, in fact last 3 annexures, the annexure 12 says list of the local risk parameters. So you being having a presence in Hyderabad might be having a different thought process, right? For taking the credit, not taking the credit, a different parameter has been followed by all the consultants there, right? But in Mumbai, it might be different. So local risk parameters is also defined geographically. Even for the traders, they have a checklist. Even for the composite dealers, they have a separate checklist. Friends, to my personal point of view, we don't mind or we are not surprised that in coming future, the officers come with a checklist, let's say for industry wise. If you are dealing in SEZ, these are the checklists. If you are dealing in pharma industry, these are the checklists. Because they are prepared long back from 2019, right? We are getting prepared today. We are having this seminar today, but they are prepared from long back 2019. Okay. So next question is, what is the last date to expect such department notice? Can we get anytime? Can we get the notice pertaining to 17-18 financial year, right? Friends, to answer this, section 73, 74, as I discussed, 73 involves cases having not having fraud and willful misstatements, and 74 involves show cause notices in a scenarios where there is a fraud involvement or willful misstatements involved. So in all these cases, the notices can be issued in this following dates. So let's only examine 1718. So I will be sharing the slides to the organizers, IIA. I'm sure they will send it to you. So in 1718, if you see, the due date was 5th of or 7th of February of 2020, depending on the states, right? So if a transaction is involved in 73, let's say I have not paid the taxes, but I have disclosed it. There is no misstatement of facts. There is only interpretation issues. Then I can only get the notice maximum till 4th or 6th of November of 2022, and the order is supposedly to be get over by 4th or 6th February 2023. So this is the last due date of getting the show cause notice. So show cause notice can only be issued after if let's say audit is happening, then after completion of the audit. So audit has to be initiated before this date, right? 4th of November or 6th of November. Before this date, they are supposed to have the starting of the audit, commencement of the audit, right? Okay, who can do the audit? The judicial officer is required to do the audit, but on the same subject matter, on the same subject financial year, both State Department and Central Department cannot do the audit, right? Let's say Bureau of Investigation have already started an audit, and now the GST Department are also conducting an audit. So this cannot be done, right? You can always oppose that. Section 6(2) clause B states that. Okay. What is the jurisdiction of the office? Where is the jurisdiction of the office? So you can always go and see the search taxpayer with the GST number. You will see administrative office and other office. So where it is written the administrative office, that is your jurisdiction office. So if you can see state center, so my administrative office is state because that is my jurisdiction office, right? Okay. Where can an audit be conducted? So audit can be conducted in the place of business, not principal place, place of business. And the place of business includes your registered place of office, your godown, your warehouse, a location where you maintain your books of accounts, even your chartered accountant office, and your agent premises also. So an audit can be conducted in all these places of business. When you get a notice, what you should do? Should you be scared of, oh my God, these people will be visiting my office? No. Please remember, it is merely a procedural activity which is to be governed by the provision of the law. Please do check whether DIN number is there or not, documentation identification number. If it is there, please click this link, put the DIN number and check whether it is valid or not. It has been found in Delhi that 30 summons were issued to different parties in different cases using same DIN number, right? So DIN number has to be separate, unique for every document. So that is to be checked. Check first that whether 15 working days time is given to you or not. They cannot issue you a notice today and say that please come tomorrow morning, right? They will always give you 15 working days prior information that they want to come and do the audit, right? So when you get a notice, first check, then they check the jurisdiction of the officer, then check the period for which they want to conduct an audit, then check the 15 working days is available or not, and then also ensure where they want to come for audit, whether they want to conduct an audit in a desk review or they want to come down to your premises. Okay, important. Commencement of audit is very important because 3 months from the commencement of the audit is the due date of completing the audit. So when is the audit commenced? When the documents are made available to the officer or officer visits to your premises for conducting an audit. I repeat, when all the documents are made available to the officer or when the officer visits your premises for conducting an audit, whichever is later, so that is the date on which audit get commenced, and from that commencement 3 months within 3 months you are required to complete the audit and issue ADT 02, and you are required to issue the taxpayer ADT 02. You cannot stretch the audit post that. Okay, friends, the accounts and records which I was talking about, this is the slide. Section 35 talks about accounts and records, and Rule 56 talks about maintenance of accounts and records by the registered person. So I've covered the important things only. Number one is tax invoice. Number two is bill of supply. Number three is receipt voucher, refund voucher, self-generated invoice, payment voucher, delivery challan, credit note, debit note. Right? These are the basic documents which they would love to check. So I suppose I've in the paucity of time I've covered what I was intended to cover, and now over to organization for Q&A sessions.
Wonderful session, Abhishek. Firstly, a big thank you to you. And what I would do is, Abhishek, maybe read out one or two questions which have come to me directly. But I would request all the participants to put in the Q&A either in the question box, or if you want to write in any of the panelists, you see an option there where you can address it to the panelist. So please go ahead and then put in the questions. Abhishek, with your permission, I would read out the question which has come to me directly, and then you may
Yes, sir.
possibly answer that, please. So there is a slide of yours under the commencement of audit where there is a mention by you which has happened, which mentions that, let me read this out. You can ask the officer of whether it will be a desk review or an in-person visit. How many times do you think that, how often do you think that the officer will respond to such questions? Now, this is from one of the participants, and Abhishek, maybe you could just give your practical experience of what you think is the practicality state-wise.
So what happens actually is that when we receive a notice, we have a connect or a communication with the officer that number one, whether they want to visit our premises or because of this pandemic, they want to continue and complete the audit at their desk only. The important thing is to catch is in the provision it is written whichever is later. So they might even come down to my premises to start the audit. Accordingly, that is the date of commencement, but they will give you a 50 document list that since these documents are pending from your end, the audit is not yet commenced. You go and give this 50 documents, they will give you further list of 10 documents that since these 10 documents are still left, the audit is not yet commenced. So that is a very tough job to determine, or rather I understand the question, the intent of the question, that what if the officer is not cooperating to establish the commencement of the audit. So in all the communications where we send the data, where we send our documents, we write this specifically that as asked by a good sir, we are submitting all the documents and we are hereby presuming that it is the commencement of the audit. So that if an officer steps into the wrong parameters, we can always challenge it in a question of law.
Excellent, Abhishek. I think thank you so much for that. Abhishek, there is another question, if I may ask, that is on an academic level. How do how do you keep yourself updated, and are there refresher courses on GST which come in? So Abhishek, this is I think more from one of our student members which has come in. So while I believe the question is more in terms of, we studied, we are past CA, but after that we go into different lines like audit or whatever. But then are there refresher courses? So if you can point out to ICAI or to any other authority, please go ahead.
So ICI is one of the body which is having continuously a refresher course having in their calendar list. You can always go into it. But see, refresher course to my personal experience can indicate that what are the basic things, right? See, being a GST consultant, I might not, even I'm not having a bit knowledge of NDS. I have forgotten almost income tax thoroughly. I was an income tax litigator 5 years earlier, but I've stopped reading income tax for the last 5 years. So now a person can only read, I suppose, one subject properly. That is more than enough. So if you want a knowledge of all, yes, you should have a knowledge of all, but you cannot be expert of all. So for getting this, I can suggest you can easily watch. What I prefer, rather than books, I go to videos. So you can log into Udemy, you can go to YouTube. Even my channel is there. I've almost recorded 30, 40 hours sessions of entire GST law section wise. You can always go and refer any or speaker you like. You can always go and see. Just choose a easy module in which you are comfortable, and not take a much pressure on unnecessary which we are not continuing it.
Wonderful. I think excellent answer, Abhishek. And Abhishek, these are the two questions directly come to me. But any other questions which has come in to the others, you may please respond to that question. There is one from Mr. Chaco which talks about, can I read this for you, please? Can ITC 04 return be part of the GST audit? Asker is Mr. Sony Chaco. Thank you, Sony,
Yes,
for asking that question. Abhishek, over to you, please.
so ITC 04 has a very amazing history. So it is a document which is to be maintained by a manufacturer when they dispatch goods to a job worker and they gets back the goods from the job worker. So it's a quarterly return which they're supposed to file. Long back, GST came 2017, 17, 18, 18, 19. Till 31st March 2019, it was straight away said that if you're not filed the returns, okay, don't file it. You're not required to file it. But from April 19, you were mandatorily required to file it. But because of the complexity of the form and because of the data required to punch in the form, still majority of the manufacturers are choosing not to file it. Any specific penalty or interest has not been levied, but there can always be a general penalty of 25,000 rupees CGST and 25,000 SGST from the government perspective, which a department auditor can always levy on you.
Great, wonderful. Thank you so much, Abhishek. Tinku, you had a question, Tinku?
Yeah. First of all, Abhishek, it was a wonderful session. I literally enjoyed it. And thanks for explaining so passionately and explaining in detail the sections. I really enjoyed the session. I am sure other participants would also be enjoying the same. So I had a very minor question. So I was listening to your session. So one place you mentioned that the official can visit your place of business, right? And can inspect the books of accounts. Can he also carry the books of accounts to his office?
Okay, so sir, visiting for an audit is governed by 65. Search seizing the books of accounts is governed by section 67. So that if you want me to answer the question, the answer is no. He cannot carry books of accounts. He can always request you to kindly give a Xerox copy for his reference, but he cannot seize it. Whatsoever he sees, whatsoever he carry, he have to give a panchnama. That is activation of section 67. That is search and seizure, not permissible when it comes down to for audit. Please understand, sir, the bottleneck is different. Audit is coming from audit commissionerate. The commissioner is authorizing different authority for it, and the search can be governed by a different body altogether. A joint, no one can be the joint commissioner can start the search and seizure proceedings.
Okay. Thank you. Thanks for that.
But that implies to someone also. In the various parts of the country, we have seen the junior superintendent is carrying a blank summon in his pocket. Whenever he wants to question someone, he just take the printout, write the name, and say, "Here it is. you are in summon, kindly give us a statement. Is not the law. So the professional should know where to challenge and stop being afraid and educate the clients ki boss डरने से कुछ नहीं होगा. मतलब we have to stop that.
Very true, very true. Thanks, Abhishek. Thanks very much.
Abhishek, we do have another question which talks from Mr. Ray, which says 5.8.3 of the GST audit manual. Can you please repeat once?
So if I show it will be took some time. So GST audit manual is a PDF file available in the GST portal, in the CBIC portal rather, and it was issued long back in 2019 by the CBIC. Following that, all the states are having their individual manuals. So I'm aware of Maharashtra, Karnataka, and recently this month only, first half, West Bengal have also issued their GST audit manual, state level. So in the GST audit manual issued by CBIC, Central Tax, in that, if you go to para 5.8.3, that specifically talks about a fact that when during the audit, while conducting the audit, if Abhishek being an officer finds that there's a difference in your books of accounts and in your GST at 2A. So Abhishek have to do following steps. Number one, reconcile what are the transactions which is not available in GST at 2A. Number two, highlight the vendors of whose transaction is not available. Number three, contact those suppliers and ask them to give an evidence of the fact that they have submitted those taxes. If it is done, they are not going to ask tax or they are not going to demand tax from you. So I want to indicate that this is a fact which I got from the very fat manual. So reading that manual from word by word is very important for us. Is very important for us. What the law indicates is written there. What the officer issues the notice is different ballgame altogether.
That's the practicality. Thank you, Abhishek. Abhishek, there is another question. Let me read that out for you. It's a slightly lengthy question. Give me a second, please. Hi, Abhishek. My question is about the commencement of audit. Assume the taxpayer receives a list of documents to be submitted, and they submit the documents along with a covering letter addressed to the officer stating that all the documents have been submitted. Can the date of commencement be counted from the date on which such documents have been submitted? That's first part of the question, Abhishek. If you want to answer this first, then there's a second part.
The second part I will connect it.
Is it possible for the officer to send a second list of documents even after the above exercise and extend the date of commencement?
So that's the point. In erstwhile law, specifically in service tax, we faced the audit for 2.5 years. An officer came, asked for documents, keep on asking for the documents. Then he shifted. Another officer came. He again started asking for the documents. So this continued. So since the parent body is the same only, so we are expecting the same in the GST regime also. To be very honest, yes, the first letter, the first ADT 1001 which they are giving. If you see the annexures which I was talking about, the entire list is already given there. So almost officers nowadays take a printout of that, tick whatsoever they want and give us physically that please bring these documents. Yes, they can always say that from this document now we need more documents, detailed documents of this. From this now we need 15 invoices of this. So the word used is all documents made available to the officer. That date will be the commencement of the audit. So yes, in the first communication, all the documents were made. That should be the commencement of the audit. That is the intent. That should be the intent of the law. But depending on the case-to-case basis, this will be a virtual. This will be a practical fight rather. Whensoever we do a case, the officer will not love to get the commencement, but we have to consistently request for the commencement of the audit.
Thank you, Pratisha, for asking this question, and thank you, Abhishek, for the answer. Abhishek, I don't see any other questions unless Tinku, is there something which has been addressed to you directly?
No, Sunil.
Okay, great. Wonderful. So, Abhishek, a very, very big thank you to you. And really, it was a very engaging and insightful session I have personally gained a lot, and as you rightly said, you did make a reference and mention about, if you're doing one part of it, you tend to normally forget about other part of it. But some of these things of, getting to know awareness, and some of these have come out very, very well. And thank you for making it so practical. I'm sure all our participants have found it to be a very, very engaging, insightful session. And I do have some requests saying that we can have you once again or a couple of times again. So there have been requests coming in that, they would like to hear you more often. With that said, Abhishek, on behalf of IIA Hyderabad, on behalf of each of my colleagues here in IIA Hyderabad BOG participants, and a big thank you to you, a big thank you to Simpac, and a big thank you to everyone, all the participants for having taken out time on a Sunday. And then I really appreciate all the efforts you put in and for a wonderful presentation. There has been a request by someone specific to share the presentation, and Abhishek, as he has mentioned, he'll share it with us and we'll share it back with you. For sure, we'll do that. And thank you, wonderfully done again, Abhishek. Thank you, a big thank you to you. Stay safe, everybody, and then look forward to hear you again, Abhishek. Thanks again.
Thank you, sir.
Thank you,
Thank you.
Thank you. Thank you, everyone. Thank you.
With that said, we will close the session for today, and thank you again. Stay safe. Bye.
Thank you.